I want you to think about the last time you bought a stock. Or maybe just check your 401k. You probably felt good. You thought, I am an owner. I own a piece of Apple. I own a piece of Amazon. You felt like a participant in capitalism. But I am here to tell you that what you felt was an illusion. You didn't buy ownership. You bought a ticket to a ride. And while you were enjoying the view, the company running the ride is quietly dismantling the park and selling it for scrap. We are living through the biggest economic transformation since the Industrial Revolution. But it's not happening with factories or steam engines. It is happening with algorithms. It is happening because one company, BlackRock, figured out that the real money isn't in owning assets. The real money is in being the operating system for everyone else's assets. Most people think BlackRock is just a big bank. They are wrong. BlackRock is the fourth branch of government. They manage $10.5 trillion directly. But through a piece of software called Aladdin, they control the risk models for $21.6 trillion more. That is almost the entire GDP of the United States, managed by a single computer code, owned by a single private company, answerable to no voters. In 2020, the Federal Reserve hired BlackRock to save the economy. They literally outsourced the central bank's job to a private firm. Why? Because BlackRock knew where the bodies were buried. And BlackRock did it for free. $0. Why would the greediest company on earth work for free? Because information is worth more than fees. In this deep dive, I'm going to show you the architecture of control. We are going to dissect how passive investing, ETFs, was the Trojan horse that killed corporate competition. We're going to look at how they are buying your neighborhood, not to flip houses, but to turn you into a permanent renter. And I'm going to introduce you to the concept of Neo-Feudalism, the economic system you're living in right now, where you own nothing, rent everything, and thank the algorithm for the privilege. This isn't a conspiracy theory. This is a business model analysis. And if you want to know how to opt out of their system, you need to understand how they built it. Let's start in 1988. Larry Fink, the founder of BlackRock, had just been fired from First Boston. Why? Because he lost $100 million on a bad bet on interest rates. Most people would have quit. Larry Fink learned a lesson that changed history. He realized, I didn't lose money because I was stupid. I lost money because I didn't understand my risk. He realized that Wall Street was full of cowboys gambling with their gut. So he decided to build a casino where he knew the odds of every single table, every single second. He didn't start an investment firm. He started a technology company. He built a supercomputer called Aladdin, asset, liability, debt, and derivative investment network. Aladdin wasn't just a database. It was a simulation engine. It could simulate the entire global economy, interest rates, wars, oil prices, and tell you exactly how your portfolio would react. In the early days, nobody cared about BlackRock's funds. They cared about Aladdin. Banks started paying BlackRock just to use the software. General Electric, the Greek government, the Japanese pension fund, they all plugged their portfolios into Aladdin. Do you see the genius here? By letting everyone use his software, Larry Fink got to see everyone's cards. He knew what every major bank owned. He knew their fear levels. He knew their leverage. He became the Eye of Sauron for the global financial system. By 2008, when the world collapsed, who did the U.S. government call? They didn't call Goldman Sachs. They didn't call J.P. Morgan. They called Larry, because Larry was the only one who had the data. They hired BlackRock to clean up the mess of the financial crisis. And that was the moment BlackRock stopped being a company and started being the infrastructure. Now let's talk about you. If you have a retirement account, you probably own ETFs, like the S&P 500 ETF, IVV, or the total stock market ETF. We are told this is smart. Low fees, diversification, and it is smart for you. But for capitalism, it is poison. Here is the mechanism. When you buy an ETF from BlackRock, iShares, you put up the money. But who gets the voting rights? BlackRock does. You own the economic risk. They own the political power. BlackRock, Vanguard, and State Street, the big three, now own about 20% of the entire S&P 500. But because most other shareholders don't vote, the big three control about 25 to 30% of the votes in corporate elections. That is enough to fire a CEO. That is enough to force a merger. This creates a phenomenon called common ownership. Imagine there are four airlines: Delta, United, American, Southwest. In a normal world, they compete. They lower prices to steal your business. But guess who the biggest shareholder is in all four of them? BlackRock. If you own all the airlines, do you want them to compete? No. Price wars lower your profits. You want them to cooperate. You want them to keep prices high and capacity low. Studies show that in industries with high common ownership, like airlines and banking, prices are higher and innovation is lower. This is why your flight is expensive and the service is terrible. The airlines aren't working for you. They're working for an algorithm that maximizes the portfolio return of BlackRock. Competition is dead. We are living in a trustified monopoly. Now, let's move from stocks to the roof over your head. After 2008, BlackRock saw an opportunity. The U.S. housing market crashed. Millions of homes were foreclosed. BlackRock and firms backed by them started buying. But they didn't flip the houses. They kept them. They created a new asset class, single-family rental securitization. They turned your neighborhood into a bond. They bundled thousands of rental checks into a financial product and sold it to pension funds. Fast forward to 2021. Interest rates were zero. BlackRock had virtually free money. They went on a shopping spree. In cities like Atlanta, Phoenix, and Charlotte, institutional investors bought 30% to 40% of all homes for sale in some zip codes. How can you compete with that? You need a mortgage approval. You need a home inspection. You have emotions. BlackRock's algorithm makes an all-cash offer in milliseconds. No inspection. Closes in 3 days. You lose. The result? Homeownership for young Americans is collapsing. Not because you buy too much avocado toast, but because you are bidding against a $10 trillion balance sheet. And here is the endgame: the forever renter. They don't want you to own. Ownership is messy. They want you to rent. They want a subscription model for housing. You pay rent. The rent goes to BlackRock. BlackRock pays dividends to the pension funds. The pension funds pay, well, maybe you in 40 years. It's a perfect circle of wealth extraction. You're funding your own serfdom. I use the word serfdom. I didn't use it lightly. We are transitioning from capitalism to neo-feudalism. In capitalism, anyone can become an owner. If you have a good idea and work hard, you accumulate capital. In feudalism, the lords own the assets, land. The serfs work the land and pay rent. Social mobility in feudalism is zero. You cannot save enough wages to buy the lord's castle. Look at the U.S. economy today. The asset owners, the lords, are seeing their wealth explode. Stocks up, real estate up. The wage earners, the serfs, are seeing their purchasing power destroyed by inflation. The gap isn't just widening. The ladder is being pulled up. BlackRock is the High Lord. Through ESG, environmental, social, governance scores, they dictate the rules of the kingdom. If a CEO doesn't follow the ESG mandates set by Larry Fink, BlackRock votes them out. They control the capital flow. Oh, you want to drill for oil? Sorry, your ESG score is too low. No capital for you. Oh, you want to build affordable housing? Sorry, that lowers our rental yield. No capital for you. This is central planning. It's just not done by the government. It's done by a private board of directors in Manhattan. And because they control the government's debt, treasuries, and the government's bailouts, the government can't stop them. They have become the fourth branch of government. The financial branch. There is one more danger that nobody talks about. Aladdin itself. Remember, Aladdin manages the risk for $21.6 trillion. Banks use it. Insurers use it. Pension funds use it. This creates a massive groupthink. Everyone is looking at the same dashboard. Everyone is using the same data. In biology, if every animal in a forest has the exact same DNA, one virus kills them all. In finance, if every bank uses the same risk model, one anomaly crashes the whole system. In March 2020, the market crashed 34% in weeks. Why? Because every algorithm, guided by Aladdin, saw the same risk signal and sold at the exact same time. It was a synchronized stampede. And then, the Fed stepped in, guided by BlackRock, and printed money. Aladdin saw the liquidity, and everyone bought at the exact same time. This isn't a market. A market has disagreements. Buyers and sellers. This is a herd, and BlackRock is the shepherd. If Aladdin ever has a bug, if Aladdin gets hacked, if the model is wrong, The entire global financial system melts down in minutes. We have centralized the entire world's risk into one server room. Okay, I know this is terrifying. It feels hopeless. But understanding the machine is the first step to not getting crushed by it. You cannot destroy BlackRock. They are too big, but you can build a personal firewall. Here is the sovereign individual protocol. 1. Reject the passive trap. Stop buying blind ETFs if you can avoid it. When you buy SPY or IVEV, you're giving Larry Fink your vote. If you have the capital, buy individual stocks. Own the company directly. Take back your vote. Or use smaller asset managers who don't vote in lockstep with ESG mandates. 2. Own real assets, the anti-rent. BlackRock wants you to rent, so you must own. It is harder than ever, but it is necessary. Buy a home, even a small one, even a cheaper city. Buy land. Own things that cannot be printed and cannot be turned off by a digital switch. If you are renting, you are shorting inflation. If you own, you are long inflation. 3. Bitcoin as the escape hatch. Why do I talk about Bitcoin? Because it is the only asset BlackRock cannot control at the protocol level. They can buy it, and they are with their ETFs. But they cannot change the issuance. They cannot censor the network. Bitcoin is the only property right that exists outside of the Aladdin system. It is your insurance policy against the financialization of everything. 4. Build parallel systems. Support local businesses. Buy from local farmers. Use community banks instead of the too-big-to-fail giants. Every dollar you spend in the megacorp ecosystem strengthens the algorithm. Every dollar you spend in the local economy strengthens your community. Decentralization is the only cure for centralization. In 2016, the World Economic Forum released a video with the infamous line, "You will own nothing, and you will be happy." That wasn't a prediction. It was a sales pitch. It was the marketing slogan for the world BlackRock is building. A world of extreme convenience, but zero freedom. A world where everything is a subscription. A world where the lords manage the risk and the serfs pay the rent. But you have a choice. You can accept the subscription. You can stay asleep, or you can wake up. You can strive for ownership. You can take on the responsibility of managing your own risk. The era of easy capitalism is over. The era of economic sovereignty has begun. The gate is closing, but it's not locked yet. I'm your name. If you want to know the specific individual stocks I am buying to bypass the ETF trap, make sure you're subscribed. We're going to navigate this new feudalism together. Stay free, stay sovereign, and I'll see you in the next one.